Quick glossary. 15 must-know trading terms. Asset. An asset is any resource or investment that can be traded, such as stocks, bonds, commodities, or currencies. Bid. Price. The bid price is the highest price a buyer is willing to pay for a security. It is always lower than the ask price. Ask price. The ask price is the lowest price a seller is willing to accept for a security. It is always higher than the bid price. Spread. The spread is the difference between the bid price and the ask price. A narrower spread usually indicates higher liquidity. Market order. A market order is an order to buy or sell a security immediately at the current market price. Limit order. A limit order is an order to buy or sell a security at a specified price or better. The order will only be executed if the market price reaches the limit price. Stop loss order. A stop loss order is designed to limit a trader's loss on a position. It automatically sells a security when its price drops to a specified level. Leverage. Leverage allows traders to control a large position with a smaller amount of capital. It amplifies both potential gains and losses. Margin. Margin refers to the money borrowed from a broker to trade larger positions. It is required when using leverage. Volatility. Volatility refers to the extent to which the price of a security fluctuates. High volatility means larger price swings. Bear market. A bear market is a market condition where prices are falling or expected to fall, typically by 20% or more from recent highs. Bull market. A bull market is a market condition where prices are rising or expected to rise, typically by 20% or more from recent lows. Dividend. A dividend is a payment made by a company to its shareholders, typically from profits or reserves. PIP. A PIP, percentage in point, is the smallest price movement in a currency pair. It is commonly used in Forex trading to measure changes in exchange rates. Liquidity. Liquidity refers to the ease with which a security can be bought or sold in the market without affecting its price. High liquidity means faster and easier transactions. Understanding these key trading terms will help you navigate the markets with more confidence and clarity.